Bhanu Baweja is Chief Strategist at UBS. Always a pleasure speaking, Bhanu. Lots to go over as well. Look, you know, people keep talking about secular growth trends as that stuff that we can really get in. Well, you guys have got your own way of looking at it. You've got the Magnificent Seven mega trends as well. My problem, Bhanu, and you know this as well, you're better at this than I am, is that your mega trends are expensive at the moment because everybody's trying to jump on board that wagon. Good morning, sir.
Good morning. Yes, that's true. And these trends, they're expensive because many of these trends pre-existed the COVID crisis. Some of them are just pivoting off this major crisis and they're accelerating. So you're absolutely right to say that, you know, from a local standpoint, in the very near term, some of these trends, China internet, US tech, are quite expensive and would be difficult to chase. I mean, there's some prices like semiconductor prices, Korea new orders, Taiwan new export orders are telling you that from the very near-term perspective, it's very difficult to see what will push these stocks much further. However, what we're talking about is something that will persist over several decades. And we're talking about artificial intelligence. We're talking about robotics. We're not just talking about Netflix and Facebook. We're talking about artificial intelligence and robotics, which will give rise to new companies. So in a secular sense, it's very difficult to see how we don't see a significant acceleration of investment and consumption away from the material to the intellectual. Now, I don't believe that there's a medium-term case for value stocks. I think if we are going to see a mean reversion between growth versus value, this is likely to happen with growth stocks coming down rather than value stocks melting up, because that was the world of the 2000s. That was the world of the 2010s when China invested significantly in construction, and that's what led to commodity prices going up. That's what led to inflation. To the extent that we saw any inflation globally, that's what led to inflation. And that was one of the main criteria for value stocks to do well, for yield curves to be steep, for yield curves to be high. In this world, which is significantly disinflationary, there certainly isn't any demand for inflation. It's difficult to see value doing extremely well.